What's up, guys? Today is December 23rd, and I'm going to be going over the trade I took earlier today, um, this morning. So let's get into it. So first things first, you know, I want to, I want to see what the overnight did. Um, you always want to check what the overnight does, and just to give you kind of like a bias idea, but at the same time, you don't want to be stuck on the bias. So as you can see from Asia session, we kind of pulled back. London at the open, or right after the open, London open, went bullish. Then sold off again and swept the London low. And so that's kind of what the pattern did overnight. So let's go back to the 1 minute chart and 1 minute time frame, because that's where I took this trade this morning. So what we have here is a chop box, a 1 minute chop box, and a chop box. All a chop box is 5 or more candles just chopping around in a box. It's literally that simple. How I find the chop box, it's always after some momentum, and then when price chops around. So what I noticed that price made a low here, but then couldn't break the lows. So price came up, made a low, price came up, then sold down, and then couldn't break this low again, came up a little bit again, then uh, stopped right here as well. So I'm like, okay, this is a strong support area right here. Then price decided to buy up, create a fair value gap, and then price continued to chop around. So I'm like, okay, now I have a chop box. I have a chop box strategy. So I ended up placing my entry, and then I also want to see which direction price is going to break out of the chop box. So at the 924 candle, end up breaking above. And so, like I said, it has to be 5 candles. So after, it was 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. After the ninth candle, the 10th candle did end up breaking above the box. So I'm like, okay, now it's the indication that I'm gonna take it long. If if it broke to the downside, I probably would have only taken it to these swing lows right here, and then just kind of did like a quick scalp right here. But since it broke to the upside, I'm like, okay, I'm gonna take it bullish. Um, so I set my entry here, and then this 2150 was the stop loss. So it was a very small risk for a good reward. Um, so I end up taking it to this blue line right here, and as you can see, my markers here, you can see the blue marker here, and then my sell marker here. Um, so yeah, so I set my entry. I set my target on this daily line. Excuse me. So if you, I don't know what instrument you guys trade or things like that, but on MQ, the daily lines on the daily chart. So on the daily chart, there's always 4 points: the open, high, low, close. I take those four plots, and then I plot them on the chart for the next day. So these blue lines that you see here are actually the daily from earlier today, or yesterday's trading session, or however you want to word it. But this just happens to be the open from today, and it was one of the daily lines from yesterday, so it kind of just lines up with this video, ironically enough. So I set my order here, and at the 9:31 candle, it took me straight to my target, and I got out right here at 9:31 in the morning. Can't be mad at that. So I ended up only taking like 4 micros on this trade. I should have loaded up, honestly, because the risk was so small. I should have increased my contract size, but I just didn't get it to change it in time. Um, so I'm a little upset at that I didn't go more heavier on the position, but at the same time, it was still like a $540 trade in about a minute or something. So it took me out there, and I was done trading. So this is what I do it for. This trade just happened to, you know, just take off right at the open, and so yeah, so that's just one of the strategies that I take on the 1 minute time frame. Um, so yeah, it was just happened to be a good day. But then I also noticed something on the 5 minute time frame as well. So let's go to the five. So now we're on the 5 minute chart, and I use the Fibonacci retracement tool on the 5 minute time frame a lot. It's one of my go-to trades, and I've been, I follow a bunch of traders and things like that, and I watch a lot of YouTube um, to see how I can, work on my skills better, get better, and implement what other people do and kind of use it into what I know and how I trade and stuff like that. I have not seen anyone use the Fibonacci tool like how I use the Fibonacci tool. So, which I'm kind of proud of myself in knowing that, right? Is like you're kind of doing something that no one else does, and it's profitable and it works. So, not to be boastful or anything like that, but it's just a proud moment. It's satisfying that what you're seeing and the things that you and how you back test it actually works and is playing out to your benefit. So it's just a cool thing to see. So yeah, so let's talk about it. So on the 5 minute chart, it doesn't really matter what the bias is of the day, like if we're super bullish or we're super bearish from the overnight or whatever. It's all what New York does. Um, so I wait for structure to happen on the 5 minute chart, which is this candle right here. So we have this bullish candle that closed above this swing high, and it closed above this swing high. So I'm like, okay, we have bullish structure now. Now the second point or the second step is to wait for a pullback candle. Um, so a pullback candle is obviously a candle that's pulling back or going the opposite direction in where the trend is or in how the trend is going. So I set the 50% line to the top of the price of the bullish candle. And then the third step is to be patient and then just wait for an entry. So yeah, and if you know anything about the fib or if you use the fib in a different type of way, you should know something called the golden zone. And what all that is like price getting into like pulling back far enough into the golden zone to look for your entries because we already have structure. This is just these red candles are it's just pullback, it's just retracement. So whenever you see something like this without structure, without market structure, don't get nervous. Don't think the trade's gonna go short and things like that. So especially on the 5 minute time frame, if this red candle continued to pull back and then close beneath this swing low and these lows right here, then I'm like, okay, the trend has shifted. Now we're going bearish. Then I would have looked for a bearish setup. But since oh my gosh, but since it didn't do that and price just stopped right here and then bought back up, I could have entered any one of these entries would have been fine. The 86% level, the 76% level, the 61% level, and then just take it and you can just ride it up. My first target is always the 38% level. So my entries are generally around the 76% level and between the 76 and the 61% levels. However, you know, seeing how price, pull back, you could just get in on the 86% level and it would have been a shorter risk. You could have had your stop loss right here at this low or at this low. That would have been not too bad as well. So let's just measure that out just to see what that would have looked like. So that's $76, but on a mini chart that would have been $760. So just keep that in mind. It's like, oh, $76 not too bad, but if you're taking 3 or 4 micros, all of a sudden it's a $300-400 trade. Um, you know, or $300 or $400 risk. So just keep that in mind if you're like looking at this setup and seeing how this setup plays out and things like that. But then you just let price do its thing. You let price pull back as far as it's gonna go. If you see the candle flip, again, if you see like a bullish candle, or if you go through your back testing, you just know like, okay, price pull back far enough, it's gonna, it's in the golden zone, it's gonna, retrace back to the upside. Then you could have set your entry here. You could have waited for more bullish momentum to get in at the 76% level, or you could have really waited for bullish momentum and entered at the 76% level and then just rode it up. But trading futures is all about entries and things like that. So yeah, I didn't take this trade because again, I would have I already won this morning at the open, so I don't think I was at my desk at this specific time. So, but just to play it out and just to measure, like if I did get in at this 86% level, and take it to my first target, that's a $254 trade, with one micro. So, with one mini, that's $2,500 just like that. And that's obviously $2,500 in one trade. It's that's a really good day, especially trading futures. So yeah, price did end up hitting the second target, the 23% level. I would have left a runner at the 23% level and at the very top of this, just to see if price continued to be bullish. But with the holidays, volume is starting to slow down, so probably wouldn't really expect that, the day before Christmas Eve. So, but yeah, that's how the fib played out again. I took the fib. It wasn't yesterday, but Friday the fib trade played out. I have a video on that as well. I'm not mad that I didn't take this trade, but at the same time, I kind of wish I was here to take this trade because it was a beautiful trade and it wasn't really much like up and down movement after this, pullback right here. So, it is what it is. Like sometimes you'll be able to take two trades, three trades a day and whatever. I'm usually a one and done type of person, you know. But everyone trades different, you know what I'm saying? So maybe I gotta start being more aggressive in 2026. Let's see how this goes. But yeah, so I hope you guys enjoyed this video. That's all I got for right now. I like to leave this stuff on my chart, so when I go back into back testing, this stuff is already on my charts. I like to leave notes for myself, and things like that, just so everything is just right there for you. You don't have to redraw it. You don't have to waste time doing that. You just go back, look at your trades for your previous month, your previous month and a half. If you feel like something's wrong, anything like that, leave all the notes in your chart, and then you'll see oh shoot, this is what I did wrong. This is what I need to do. I need to be more patient. The charts will tell you. So just continue to trust yourself. Continue to do the back testing. And then just be patient. Don't be worried about missing out of your trade. Just wait for price to do its thing. Set your entry and just let it ride. So yeah, that's all I got for you guys today. I hope you guys learn something from this video. I hope you guys follow me and continue to watch and learn, ask questions. Continue to follow me on YouTube. Comment, share. Let me know how you use the fib. Tell me how you trade. Maybe I could take one of your trades, start backtesting what you got, and we can start to get this money together. You know what I'm saying? But I do have a Patreon that's only $20 a month, and you get a free week trial. So if you want to trade with me live, we could do that. Only $20 a month to get you trade live with me. So let's do that. Let's get you signed up. Take advantage of the free trial. There's videos on how to take the fib, and I got some other stuff on there for you guys as well. So let me know in the comments. Continue to share, follow me on Instagram, Prospect Capital, and yeah, I'll check you guys. I'll be back on the charts Friday. I won't be on tomorrow because of the Christmas Eve. Volume's gonna be low. don't get trapped into something. Be back on Friday. So yeah, have a Merry Christmas, and I hope to see you guys on the charts on Friday. Alright? Peace.